Hello and welcome to this week's weekly video featuring Tom's Tools and yours truly, Mike Wade. Let's get to the disclaimers real quick here. Stock and options trading has large potential rewards but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. You know all that. You can actually lose money. Also note that I am not an investment advisor. Please don't construe anything that I'm about to tell you as investment advice. One final note, all prices are in US dollars unless noted otherwise. Feel free to read the balance of the disclaimer by pausing the recording. Alright, so the last three videos I spoke to you about how to use the earnings effects ranker to find gapping stocks and to take a look at IV Rush and showed you three ways you can actually use the earnings effects. And one of the most popular ways, of course, is the straddle. So in this particular video, we're going to be talking about Tom's straddle searcher. And the three things I'll cover here are finding the best breakouts using the earnings effects. That'll be a quick review. If you've seen the other videos, you know how to do that already. So we'll do that quickly in a back test. And then I want to show you how to find the best probability straddles. There's a handful of ways to search for straddles, and there's one I like in particular. I'll talk about all of them, but I want to show you one and show it to you in a back test mode. And then I want to leave you with basic straddle entry and exit rules, at least for breakout straddles. Alright, so let's hop right into the tools to get started. So these are Tom's tools. One of the things I'm going to do in these videos from time to time is to do a back test, and already I'm back testing for January the 2nd. That's the first trading day of 2018. You can set your own back test dates by using this box up in the right corner of the tool. You can click the calendar button and then select the actual date using drop downs, or you can actually just type in the date. And then you click the go button, and that will pull you into the correct date. So if I select the calendar 1202, that puts me back on January the 2nd, 2018. I'm in backtest mode. It's as though I'm using the tool on that particular date. It's a really powerful feature of Tom's tools, and I really recommend that you use it. All right, so let's just quickly review how to find the best earnings gappers, okay? Actually, before I do that, let me just show you one quick slide just to remind you about what a gapping stock is. So this is a stock chart for TRIP, and you can see the green E's, or the green E triangles. These are the earnings dates, and you can see over the past several earnings periods that TRIP has a tendency to gap down or gap up or gap up or gap down. It gaps in multiple directions. It's likely to gap in the next earnings announcement, given that historically it has gapped. So that's the idea, and what we want to do is place a straddle and profit on these gaps. So that's really the strategy. How do we make money on a gapping stock? And I'm about to show you how to do that. So let's pop back into the tool. I'm going to find the biggest gappers. So that's the first thing I want to do. So I go to Stocks, Stock Analysis, and Earnings Effects, and I'm looking for the stocks that have the best price change after earnings. All right, so if I select this button here, which is best price change after 4 earnings, that's going to take a look at the average price movement after the earnings announcement, averaging past 4 earnings announcements. So that's the first thing you want to click. If you are actually back testing this tool and you want to actually get into a 30-day straddle, which I'll talk about in a minute, you can also turn on the future earnings wizards. And what I'm interested in is find me stocks that have the best gapping movements over the past 4 earnings periods and have earnings coming up in the next 1 to 30 days. All right? I'm going to run this scan against the S&P 500. You know why. The S&P 500 is the institutional playground. It's where the biggest, most institutionally sponsored stocks live. Slippage is generally more narrow on these stocks, and that's good for options traders, of course. So let's go ahead and run the search. So I'll just click the search button. Again, all I'm looking for is the best price change after earnings, and I want to find, I only want to get a list of stocks that have earnings coming up within the next 30 days. All right, so again, I'm also back tested on January the 2nd, 2018. So this is what you want to do when you're using Tom's tools, is to practice using the historical data that's all over the place in Tom's tools, and get your experience without actually risking any real money, which is what I'm showing you how to do here. All right, so if I scroll down a little bit, and you've seen this before, you can see that we have a list of stocks. We've got the company name, the symbol, the chart, the picture, the news, etc. We have the average price movement over the last 4 earnings periods. You can see here 4 earnings checked, and then we have days to next earnings here. So this top one, Seagate Technology, has earnings coming up on January the 29th, which is 27 days from now, and you can see that there. All right, so what do I do with these stocks? Well, I want to check out straddles on them. So the first thing I could do is say, well, wait a minute, why don't we just go ahead and take the top 20 of the best movers and let's save them into a list called My Stock List. All right, so what I just did was I changed top 224, I changed that to 20, and then I'm going to click replace, and that's going to copy these top 20 stocks that have really nice price movement after earnings on average. The top one on Seagate has 18.57% average move after the earnings announcement over the last 4 earnings periods. And you can see that all of these top 20, you know, the 20th one on ADP has an average move of 7.48%. So these are the biggest gappers, and I'm going to save those into a list called My Stock List. When I click replace, then you're going to see a red textual message up the top here that says the top 20 stocks were saved in the My Stock List. All right, so the next thing I want to do is I want to go into, and again, I'm still on January the 1st, 2018. I now want to go into Tom's Searchers, go to Searchers, Single Strategy, and then, let's try that again, Single Strategy, and then Straddle. And then I'm going to take that list called My Stock List, and I'm going to go hunting for straddles. Well, I'm not. The searcher will go looking for straddles. All right, so there's a number of different search wizards that we can use. We can use none and just go out and find basic straddles. We can find cheap ones that have the options that expire in the next 20 to 90 days. I can use percent to double, and those are the ones where I have the best chance of doubling my money in terms of distance needed to move to do that. But this is the one I really like, and that's the highest probability of touch. And what touch means is highest probability of touching the percent to double. What that means is that this one here has the highest probability of actually doubling my money. All right? So make sure you check 60 to 145 days. You don't want to use the 20 to 90 days. I want to use longer term options on this particular straddle opportunity. The last of the searches you can use are gamma divided by theta, and that measures the impact of sensitivity to stock price movement divided by theta. All of that is contained within the help. I could talk for hours about this scanner, but I wanted to give you something to play with. So if you have questions about any of this, then feel free to hit the help button here, and that'll take you through the bells and whistles, every bell and every whistle in the tool. All right, so I've hit the search button, and this is what's come back. And you can see on the top here, we have several different opportunities at our disposal. We have AMD, you have the stock symbol, you have the actual cost for the straddle, the closing price, the strike price being used, the expiration month, the prices of the calls and the puts, the actual volume and open interest, days to the next earnings announcement. You've got, and then call divided by put percent to double, so how far does the stock need to move to double, and then the probability of touching either of the percent to double. So that really means is what's the probability that AMD, based on history, will give me a double. All right, so those are the main things of the tool. Let's go ahead and take a look at this first one here. So I'm going to go ahead and select AMD, and let's take a look and see which straddle this brings back. Now obviously it's the strike price is close to the money. We're buying a April 20 straddle. This has 108 days left of time in it, and that's what we want. We've got our earnings date coming up in 28 days, which is right around 30 days, which is what I like. I'll give you the exact straddle rules here in a minute. And let's go ahead and just take this. So we're going to spend $238 on this straddle. My earnings date is January the 30th, so I want to get out the next day. All right, so what you'll see here in a minute when I leave you with the straddle rules is when to position your straddles in time relative to the earnings announcement, as well as when you want to get out. So I'll talk about that in a second. But let's go ahead and go to January the 31st, which is the day after earnings, and let's see what happened on AMD. And you can see here that this ended up being a pretty good one. You can see down here that the stock really took off into the earnings announcement, was actually making money well before we hit earnings, and this stock just was a terror to the upside. It was the highest probability straddle, and we made about 67% on our money in a period of 27 days. All right, so that's the basics. Now, when you want to play with this tool, I'd recommend, of course, that you practice and backtest. All right, so let me wrap this up and tell you what I just showed you. So first off, we went into the earnings effects ranker. I selected best price change after 4 earnings. That's going to give me the biggest gapping stocks over the average of the last 4 earnings periods. Then you take the top 20 from that list and you pass it over to the straddle searcher. You select highest probability of touch, 60 to 145 days, and these are the rules. You want to buy your straddle and at the money straddle 30 days before the earnings announcement. Use 60 to 120 day options and then exit after the earnings announcement. All right, so that should get you started, and I hope you enjoyed the video, and I will see you next week. Thanks for watching.